Hello and welcome to BQ Prime. A very good morning to all the viewers. Overall, in terms of markets, clearly a 0.3% up move is what we are seeing. You have Nifty, which is trading above those 18,600 levels. So we are just around 1.2% away from the life highs as well. Bank Nifty is in fact slightly somber in trade today. A very flattish move, and we've declined nearly to the day's lowest levels as we speak right now. A lot of stock specific action is what we are witnessing in trade. Joining us on the show to discuss more is Rahul Shah, Senior VP Advisory at Broking and Distribution at Motilal Finance at MOFSL. Rahul, good morning and welcome to the show.
Good morning.
Rahul, let's start with a couple of movers and shakers in trade today. You have a Torrent Power that is in focus. They've signed an MOU with the government of Maharashtra. A big contract coming their way with regards to the MOU, and the government has said around 71,000 odd crores is what they're looking to garner out of it. What's your view on a Torrent Power, specifically from the renewable space, and what would you advise an investor to do at current levels?
I think obviously this is the positive news for the torrent power, and if you look at entire power sector as a whole has not done anything in last 6 8 months or maybe a year if you look at it. So I think if I look at it entire uh, if I look at it entire power as a play and infra as a story which has played out in last 3 4 months, then I feel that I think there's a lot of room for the power stocks to do two majors in this player in this sector. One is obviously Tata Power, and second is Torrent. I think both looks interesting, and both have done nothing in last few months. So I think risk versus reward, and what we see from the a lot of data points also which keeps coming, that I think the power consumption has moved up in last 2 months. So I feel that I think Torrent Power looks interesting. Risk versus reward quite favorable from current levels as well.
Right. Moving on, TeamLease is another one. The stock is up almost 3.5% in trade, but an absolute underperformer if you see the last 1 year. 30 to 31% of a downtick is what we've seen. In fact, Motilal Oswal has upgraded the stock to a buy as well. And clearly, as you've mentioned, a lot of factors that are turning positive. Valuations are looking, pretty attractive as well. What is it that's making you positive on a TeamLease?
I think one simple thing I think is staffing as a sector has done nothing, as you rightly pointed out, in last 1 year and a half, and I think valuations have also cooled off. And looking at the green shoots and what we feel that I think things are coming back overall. So looks interesting to get into this space. So now the stock has obviously underperformed and at reasonable valuation. So I think this is one of the thing, and I think if you look at it, the markets are getting into a broader based rally. They're enough few polarized by large cap stocks. So I think the trigger for that staffing segment will figure out it in next 1 year or so. So I think we feel that at valuation comfort gives us that one should buy TeamLease for current levels.
Right. Moving on, you have non-life insurance companies that reported numbers as well for the month of May. Overall, the non-life insurance premium has grown by almost 18% to 18,031. Now, if you look at companies like ICICI, Lombard, Star Health, Bajaj, New India, as well as Aditya Birla, it's mainly ICICI Lombard which has beaten the industry growth number for May. It's grown at 21%, whereas the others have been in that range of 3 to 16%. What's your view specifically on an ICICI Lombard as well as the non-life insurance sector as a whole?
I think obviously after a long time we've seen that non-life players have got into a picture in last couple of sorry, I think last 1 month or so. If you look at it, and secondly, I think the positive trigger by the ICICI Lombard by ICICI going to raise the stake, which we got the news a couple of weeks back. Post that ICICI Lombard has been in a focus, has stock has been a laggard for quite some time, and obviously there's numbers which has come up for the month of May, which is promising. So I feel that the stock's valuation is promising from here. And second, obviously, the raise in the hike in the stake by ICICI and ICICI Lombard again would by September, which would be a positive trigger. So I feel that I think in a non-life pay insurance companies, I think ICICI and Lombard tops the chart.
Right. So as I say, Lombard tops the chart as well from non-life insurers. Moving on, the FMCG pack has been in focus over the last couple of trading sessions. In fact, the FMCG index itself has already been trading at life high, record high levels. Today, you have a Britannia as well as Nestle, which are seeing some smart gains in today's session. What's your view on the pack and both these counters, specifically from a valuation perspective? Because clearly, the monsoons are delayed in terms of the onset in Kerala. However, everyone's now watching out for how the inflation number is going to look like, what's going to come out of the MPC tomorrow. How are you looking at these? Do you think this is just a precursor to what could be expected?
I think if you look at Q3 numbers versus Q4 numbers for the most of the consumer companies, I think one trend is very clear. I think that the mood of the consumer has changed, and it has been better than what it was in Q4. Secondly, let's not forget, I think where the commodity prices have fallen in Q4, and I think that's what we've seen the margin expansion in a lot of FMCG companies. So my sense is, I think FMCG, looking at the consumer boom, I think what we are seeing it, and most of the companies post numbers have rallied quite a bit, and as obviously it's reflected in the FMCG index as well. So I feel that obviously stocks like Nestle, Britannia, Lever, Marico, all of them will be upgraded, and we'll see some more upside from here as well, looking at it. And secondly, whenever we see foreign institutional investors start buying and continue to overall in India as a whole. So I think one list of stocks which is always there in their list is obviously FMCG pack. So that's also one of the trigger for this thing. And going forward, I think as you rightly pointed out, that monsoon has been delayed for a week or so. So I think the most important thing to look at is, I think, the couple of weeks later, how the monsoon, goes and performs rather than just a delay, or whether there is a, lesser monsoon, which is going to be more critical than this. So I don't think so that's going to impact immediate, but I think yes, it could impact more if in case couple of weeks we'll come to know how the monsoon has been progressed. Thirdly, I think, as you rightly pointed out, I think tomorrow's MPC's meeting will give a better picture on overall inflation targets and all. So I think till now, whatever it's been reported has been better. So and that's what we have seen. I think a lot of FMCG stocks have been in focus and have done well in last 1 month or so.
Right. So that's with regards to FMCG players. You have a Tata Motors as well, which is in focus. Good move seen on that counter. In fact, today is Investor Day for Tata Motors. So I think a lot of updates that could be coming out of the investor meets that Tata Motors has as well. How are you looking at the company, Rahul?
I think if I look at Tata Motors as a whole, I think blockbuster performance of Q4. I think if you look at it after a long time, Tata Motors have performed in last 3-4 months. I think from December onwards, we've seen that the monthly numbers have been pretty strong right now. If you look at in Q4 commentary, also the management's commentary of reducing the debt of JLR, in a domestic front passenger plus the commercial vehicle again coming back into a focus, which will do well, and then few launches on the electric front are also would be augured very well. So I think the good responses plus the new launches of the electric vehicles, which is going to be better for Tata Motors. And thirdly, I think obviously the GLR story has been rolled out globally very well, and the monthly and GLR numbers also, if I look at it, have been pretty strong. So I think all this puts together, I think the Tata Motors, which has underperformed since last 6-8 months, have shown some good strength in post results as well. So I feel that I think there should be some more upside of 10% from here, before stocks just cooling off post later.
Right. Moving on, Zomato is an interesting one to talk about as well. I think, if I'm not mistaken, Motilal Oswal itself has initiated a coverage in the month of April, and that time we had an upside target of almost 30% at a price of around 54. Today, if you see, Zomato has already breached the target price of 70, and it's back at the IPO price in that range of 72 to 76. A lot of factors that everyone is watching out for over there, Rahul, from what the management has indicated in the earnings call, plus a lot of brokerage upgrades post earnings that have come in as well. What would your view be on a on a Zomato, I beg your pardon? And secondly, would we be revisiting an upgrade? Are you expecting an upgrade on that front as well? Because it's already crossed our target price, your Motilal Oswal's target price.
I think one thing is very clear. I think post last year of fancy in most of the new age businesses, and I think the valuations have cooled down for a lot of stocks in that new age businesses, and at some point of time, which became attractive. So that is what we've also done for Zomato. Also, I think we picked it at initiated a coverage at right time, and stock has obviously moved from here. So I think I would and where the markets have performed in last 3 months. So I believe that I think one should continue to hold Zomato, wait for the Q1 numbers, and then we'll take a call. I think. Or whether to exit or something, but at this levels, I feel we advise investors to hold on to Zomato.
Right, so that's with regards to where Zomato goes overall. Moving from there on, we just have a little more time. What's your view, Rahul, on a JK Lakshmi Cement? Because clearly, with the acquisition that they've made in the eastern region, that gives them a better mix in terms of geography overall. How are you looking at the cement pack? Because there is some bit of momentum, but very mixed cues is what we are picking up.
I think overall cement as a whole, if you look at it, I think most of the large names like Ultratech and all, they have been hitting a 52-week high. And if you see in last 1 year performance of the most of the cement companies have been pretty good. I think obviously primarily two, three reasons for it. One is obviously the petcoke prices, which have fallen, and I think which has fallen, I think 30%, and the cement prices are firm and the volumes are pretty strong. And we what we see is. So I think the dispatch being very strong, the prices being firm, and this the margin expansion, which will augur well. Fourthly, I think if we talk about, I think post our budget with a thrust of spending on infrastructure, which we saw from the government side, and I think which is quite visible. And secondly, I think if we look at the way the real estate companies which they came out with their Q4 numbers and which they gave their updates as well have been pretty strong, and a lot of companies give the one of the best quarter of their life in this quarter. So I feel that I think real estate stocks plus the infra story plus I think the margin expansions all to put together are favorable for the cement companies. So I think obviously if I compare between the large versus mid plays in a cement play, then I think obviously JK remains the top notch in that space. I think there's a huge valuation difference between them between the large like Ultratech and Ambuja. So I think it remains a value pick in the cement space. So I would advise investors to buy or hold it from the current levels in JK Lakshmi.
Right. So JK Lakshmi Cement, a value pick coming in from the cement space. Thank you, Rahul, so much for joining us on the show and sharing
My
those views
pleasure.
overall. But a good set of mix that we've discussed in terms of stocks. And if you see in terms of markets, they are trying to make an attempt to inch higher, but how successful they will be is going to be interesting because two important events that are lined up with regards to the MPC as well as the Fed. So the outcome from there on, whether it's priced it or not, is something we need to wait and watch. That's all that we have on this segment. Thanks for watching. Lots more lined up on the other side. Please stay tuned.